Your homeowner's insurance policy can offer financial protection in the event of an unexpected disaster involving your home or personal property. But how you will be reimbursed following a claim depends on the type of coverage you have. There are two main valuation methods when it comes to your property and homeowner's insurance policy: replacement cost coverage and actual cash value coverage. Replacement cost coverage can offer compensation for the cost of replacing your stolen, damaged, or destroyed property with a brand new version. For example, if your couch is destroyed in a house fire, replacement cost coverage would reimburse you for the cost of purchasing a comparable new couch. In other words, replacement cost coverage will replace your property without any deduction for depreciation. Actual cash value coverage, on the other hand, can offer compensation for the depreciated value of your stolen, damaged, or destroyed property. This value is determined by the age, condition, and expected remaining useful life of your property. Under this coverage, you wouldn't be reimbursed for the full cost of replacing your destroyed couch. Rather, you would be compensated for the current market value of the couch based on the condition it was in before the fire. Regardless of the type of policy you have, it's important to maintain an up-to-date home inventory. Take photos of your property and save receipts to help determine the amount of coverage you need. To discuss which coverage option is best for your unique homeowner's insurance needs, contact us today.